Let's move on to infrastructure companies, which figure prominently amongst analyst bets for 2020 in terms of stocks expected to give the highest returns over the next 12 months. 4 out of the top 5 are infrastructure names. Sumit Sarkar is standing by with the list. Sumit, good morning. And what makes the street so bullish on this pack, which has largely been absent from giving returns for the better part of the last year?
Well, actually, I'll come to that. First, I'll tell you the criteria of how we have selected the stocks. So we have selected all listed stocks in India, and from which we have filtered the stocks that have more than 10 analysts covering that stock. Now, among these stocks, the 5 stocks that are expected to generate most returns over the next 12 months, 4 of them are infra stocks, and the only non-infra stock in this list is Healthcare Global. So I'll start off with IRB Infrastructure. Now, end of concession agreement for the Mumbai-Pune Expressway, which contributed nearly 38% to its total revenue. No projects awarded so far by NHAI under the BOT model, and 2 projects awaiting approval to start have been the major concerns for the road developer in 2019. However, analysts expect the stock to gain close to 90% over the next 12 months on its deal with GIC, which will help the company deleverage its balance sheet. Along with that, the company is also eyeing to bid for the upcoming 19 BOT projects worth nearly 30,000 crore rupees, which will improve the revenue visibility going forward. So this is the reason why analysts are bullish on IRB Infrastructure. Secondly, Capacite Infra. Now, the muted financial performance in the first half of financial year 2020 owing to elections and extended monsoons. Along with that, reports of tax rates also led to the downfall of the share prices of Capacite Infra in 2019. However, the company has a strong order book of nearly 11,000 crore rupees, which is more than 6 times its last 12-month revenue, which gives a good revenue visibility of going forward. Along with that, the company's focus on cash flow focused growth strategy and a strong balance sheet have made analysts bullish on the counter. NCC. Now, 2019 was not a great year for the company, with elections curbing order accretion, extended monsoon limiting order execution, and the newly elected Andhra Pradesh government terminating or serving stop work notice for large part of its order book. However, analysts continue to remain bullish on the counter on the back of its declining debt, expected resumption of stuck Andhra Pradesh orders, pickup in new order inflow, and Semcop claim settlement, which will also lead to debt reduction for the company. And lastly, Ashoka Buildcon. Now, a cut in annual revenue growth guidance and an overhang of an exit by SBI Macquarie Infrastructure Fund led to the downfall of Ashoka Buildcon in 2019. Now, during the year, the company had lowered its revenue growth guidance of financial year 2020 by nearly 5 percentage points to 20-25% due to extended monsoons and land acquisition issues. Along with that, the SBI Macquarie Fund is also looking to sell nearly 39% of its stake in the company's subsidiary, that is Ashoka Concession Limited. But analysts expect the stock to outperform and run up in 2020, that is over the next 12 months, as it has received appointed date, that is the date to start the project for all its HAM projects, which is expected to drive better execution starting 4th quarter of financial year 2020. Along with this, improvement in its working capital, which led to debt reduction, have also kept analysts bullish on this counter.